Welcome to Recovery Report Live. I'm Dan Odess, CEO and founder of GlobalPro, where we've managed more than $1 billion in loss and damage. We are your insurance experts, and this is the Recovery Report Live every single week, Thursday, 11 o'clock Eastern Standard Time, 10 o'clock Central Standard. We go live to talk about insurance information you can use, and there's tons of information out there that you can use right now as policyholders, so much so that now there may even be a congressional hearing on what is going on in this industry. It is atrocious, to say the least. If you missed the 60 Minutes expose on the fraud, the rampant fraud that is being reported, that is being committed by insurance companies, well, I recommend that you go check it out because it may be a little bit eye-opening for you if you're not actually in the industry. But if you're in the industry, let's just be honest, we expected it. If you're not in the industry, it's definitely going to open up your eyes wide to what we deal with on a regular basis with these insurance companies. And unfortunately, in Florida, there's been this massive campaign about don't sign anything, dating back to shortly after the first major hurricane hit the Florida region. And there's a campaign of don't sign anything, conflated these issues of needing representation, not needing representation, and assistance with claims and with contractors and hiring them and your obligations under the policies and many other things that, quite frankly, I've been trying to talk about and discuss right here in the Recovery Report Live for the last couple of weeks. And due to some technical difficulties, which I believe we've now overcome, we are delivering this information to you. The reality of it is that there's many different key points that we need to address. The political influence that's going on and what is happening with our industry, the legislative favoritism. It's just absolutely certainly not in the interest of the policyholders or the consumers. Let's make it more broad, right? Public adjuster disempowerment. There's definitely been this movement against public adjusting. Certainly, there's lack of evidence to suggest the things that that they are lobbying for in order to further restrict your rights as a consumer to representation. And that's what a public adjuster does. They're licensed representatives at the onset of a loss that can help you in your recovery. Delayed fraud investigations. We know that these issues of fraud have been reported and documented, but yet there's been very little outcome from those investigations, despite yet more devastation disasters occurring. And also the mountain of evidence to suggest that, in fact, this was committed. And what had been done, which we'll get into in a minute, what does it actually mean to you as a policyholder? And consumer vulnerability. We are all very vulnerable right now. Why? Because the cost of insurance is so high. It's hitting our pockets. And if you've been damaged, you need the money, right? Tough economic times. You're looking to your insurance to help you recover. It's essential that it is there to help and protect you. I mean, again, that is exactly what insurance is there, to put you in a pre-loss condition financially. A pre-loss condition financially, right? Making sure that you are where you were 1 second before that loss happened financially. Gives you the money to rebuild and put back your home, business, or community association in a pre-loss condition so you can continue to move on. And it shouldn't be about being penalized, but yet deductible phobia creeps in and all these other concerns creep into your decision making as to whether or not you're going to make a claim, when you're going to make the claim, and who you want protecting your interest. And if you're a board member or a community association manager, you need to think real long and hard about this. We keep hearing about how agents are influencing the decisions of board members of community association managers and suggesting the idea of, well, let's see what the insurance company is going to do. The mountain of evidence that suggests that the insurance companies are committing rampant fraud with regards to the handling of claims would suggest that you are not protecting the fiduciary interest of your unit owners if you do that. Now, if you're a business owner with investors or partners, same situation applies. If there is evidence out there that insurance companies are committing fraud by editing estimates and by denying claims that are rightfully made and are owed money, then why is it that you think that you have the knowledge and expertise in order to manage and mitigate this situation for your business or association? I say mitigate because, again, it's all about mitigating the downside, right? We want to make sure we buy insurance to protect us from the downside following a loss, making sure that we shore up our financial interests in a loss. That's what it's there for. While most of the conversation when it comes to insurance centers around deductibles or premiums. The reality of it is insurance is there to pay you when you have a loss. But we get jaded by this. Our own appointees or legislators take this situation and twist it and mold it into something about you as a consumer, the advocates that are working for you, and so many other things, and not about what the industry itself is doing, how they're selling you product, what they're selling product, and what they're charging you for that product should be at the center of the issue, not the reverse of it, which is the claims, the advocates in making those claims and how the claims are being made. I mean, one of the things I wanted to touch on was this issue, this emergency order that was once issued that was then followed up by a revision requiring policyholders and their advocates, as well as insurance companies, to publish unadulterated estimates utilizing certain types of estimating softwares. Well, it was said or sold as an emergency order to deal with this issue that was reported in the 60 Minutes expose, but as with further analysis, it is quite evident that this did not do what as it was intended. And also, I would strongly, my opinion is that I strongly believe that that was somewhat intentional, right? Again, we need to even the playing field here, and we're certainly not on an even playing field. The political influence that is going on, if you look at the significant capital contributions to certain campaigns and interest groups, from interest groups that are protecting the interest of the insurance companies and not policyholders, the numbers are so lopsided. It's unbelievable and so obvious to see the influence of these special interest groups in protecting the interests of insurance companies who continue to rake in profits and continue, even those that fail, okay, I'm going to air quote this, fail, it's found that it has nothing, almost nothing to do with claims or lawyers suing or public adjusters or mitigation companies, which unfortunately is part of this massive campaign right now in the wake of all these storms. It's about don't sign anything, even though your obligation as a policyholder is to sign something so someone can actually mitigate your damages. Now, they created this portal for you to be able to go submit contracts. We've heard reports that that's not going so well. And also the campaigning around it, again, conflating issues, was not very specific as it relates to contractors. It could be insinuated to mean public adjusters and lawyers and everything else. You even saw some national news coverage on this issue get it wrong, in my opinion, as it relates to what this type of portal should be used for. And that's of great concern to us as consumer advocates. So, and when you're vulnerable, one of the points I made, you may take it for what it is, that information on its face, and simply do nothing. Why? Because they said, don't sign anything, just submit the contracts to the portal. Well, but the reality of it is that your situation may be unique in your financial situation, the extent of damages in your property, the mitigation that's required. So I don't quite understand the construct of this campaign and how it's helping the policyholders of Florida. And also, too, if you looked at the earlier messaging on it, highly confusing, and also, quite frankly, as it's been posed to the CFO and the Department of Financial Services, how do we reconcile the mixed messaging and the confusing goals and objectives of this type of campaign, which, by the way, was not vetted by anyone on the consumer side of things, and there's a lot of information out there. I can cite to many different instances where this information can be conflated and misunderstood, particularly in the emergency order that we talked about, requiring certain types of estimates to be submitted a certain amount of time. No need to get into the details of this right now or in this conversation, because, quite frankly, it's of no consequence as you as a policyholder. It's more so for advocates, whether it's your contractor that's working for you and trying to make sure that you're mitigating your damages and rebuilding your property, or your public adjuster or attorney, making sure that you're complying with your obligation to the policy. We don't touch on those things in the emergency orders or in our messaging, which is obviously of great concern. But one thing we did hear about is about how like 600 policyholders walked into a place and walked out with $1 million or so. Do the math; it's really not that impressive. But the reality of it is that it was once said, "Come there, we'll review the contract and we'll get you out of it because you signed that in distress." That was the direct. That was a direct message there. There's no way of confusing that at all. But did you really always sign it under duress, and is it always wrong to have an assignment of benefits or a direction of pay? And the answer is no. There's so many reasons why it actually makes sense. You hear a lot of negative campaigning around this, but I can tell you right now, there is a purpose and a reason why assignment of benefits exists, was upheld by the Supreme Court and various other jurisdictions, and fundamentally why it makes sense. Now, if you bastardize it and you politicize it, and you construe that with the complaints and issues by the industry, the insurance companies, well, then you end up with this different story. So oftentimes it works to the advantage of the policyholder. So few times it may not. And again, the numbers that they allege supported this move towards anti-consumer legislation and protecting the industry for changing attorneys' fees and all those other things is coming full circle. There's recently a actual, and I wanted to get this right, congressional representatives and action demand. Let me say it this way: congressional representatives demand action on hurricane insurance claim following the 60-minute expose. Like, this is full circle here, guys. We know that the data and evidence that was propounded or proposed, let me say proposed really, as allegedly supporting this initiative, well, quite frankly, fell flat. There's articles written about this. It's not getting obviously as much coverage because it's not being publicized by those that are in the position to be able to make these changes right now. But those that are trying to influence it are certainly trying to push this messaging, as I am, to get the correct information to you as consumers, which is that, quite frankly, there isn't support for the need for the changes in which were proposed and made into law regarding this litigation. There is a lack of there's a lack of concrete data that actually supports that litigation was causing the rise in premium costs. In fact, some of the things I've just cited to with regards to these insurance companies have gone into receivership of the FIGA program. Again, the auditors there didn't find evidence of this. It was more mismanagement by those that we find legislators are protecting through these initiatives, this anti-consumer legislation. So again, conflating it, right? And so the insurance companies have already denied more than 37,000 claims alone following Hurricane Helene and Milton. The timing is particularly relevant given the 60-minute expose. So 37,000 claims already denied. There's, again, this isn't new news, though. We saw this in prior storm seasons where there was a rise in the amount of denied claims, and we were led to believe it was because people misunderstand coverage. Well, a lot of that has to do with shrinkflation, which is another issue we talked about, and a lot to do with and I believe to be deductible phobia, is that there is a campaign by a lot of brokers as it relates to deductibles. Oh, your deductible's high, think about consider it. You don't want to make it because your deductible's high, and if you make a claim and you don't get paid for it, well, then your rates are going to go up because you've made the claim and you didn't get the recovery. So we need to know if you're going to make a claim, if there's going to be a recovery, but how do you know if you're going to get a recovery if you don't make the claim? I mean, think about how stupid this sounds, right? Then this issue of shrinkflation, I mean, this is coming out of the pandemic, 2021. We were talking about it a lot with legislators that, yeah, rise of insurance premiums, but no one is talking about the inflection point of coverage, right? That was going down, rise of costs going up. So there was this sales tactic at one point where brokers were saying, oh, your rates are flat if you look back over 5-6 years. And by the way, by all means, it was working. However, they were not disclosing this shrinkflation, this issue of lack of coverage. They're writing out of policies all kinds of different coverages. I'm not so sure that is related to hurricane claims, though. That's the irony here. We still have hurricane coverage. And most of the claims that we're hearing that are getting denied is relevant to homeowners. But you don't see really provisions in there regarding wind-driven rain, and you still have the issue of flood versus wind. But I mean, this issue's been beat up as much as you possibly think it has. I think it has more to do with the tactic in which insurance companies are engaging in to investigate these claims or lack thereof. I mean, again, pointing to the 60 Minutes expose, which, by the way, again, the 60 Minutes expose obviously shined a bright spotlight on an issue that was quite evident and relevant for, I mean, decades. I mean, I can go back quite far to and analyze where claims that we've handled, the thousands of claims that we've handled, where we can tell that the adjuster that was actually handling the claim in the field had a different opinion than the examiner back in the actual office, who unfortunately had the authority, whereas the person in the field didn't. I mean, look, you can look to Superstorm Sandy 2012. These adjusters were going out writing reports, and then through the actions of examiners or other people they're reporting to, were influencing the experts to write reports to basically say none of the damages were caused by it. Well, I mean, this is just yet another extension of that same problem, where the disconnect between what's going on in the field and what's going on in the offices and the claims manual and the influences and the decision-making process for paying a claim is the problem. And if you strip out consumer protections and you make it, and again, I more eloquently stated it earlier, which is the public adjuster's empowerment, meaning a lack of access to representation by consumers, and you advocate so hard as a legislator. The people that are put in power to protect, I mean, let's be honest, they're to protect us as consumers, and they act as if they are doing that, but at the same time, almost all of their messaging has to do with protecting the insurance companies in some way, form, or fashion, okay? This idea of don't sign anything is because the insurance companies are sick and tired dealing with the mitigation companies and the litigation and the public adjusters that are holding their feet to the fire, that are trying desperately to keep them honest. And then suddenly you run a campaign to basically say, we don't need this. You don't need this as a consumer. Based on what? I mean, literally, the policy says I have a duty and obligation to mitigate, and you're saying don't sign anything. So I'm going to now take longer to mitigate my damages, which we've seen used as some prejudicial argument by insurance company, meaning in layman's terms, that somehow the insurance company, that you didn't do what you were supposed to do, and therefore it caused more damage or caused an issue in the claims process and led to other issues inside your claim, which they can't be held responsible for, and therefore they're going to underpay or deny or delay the claims process to do further investigation. Okay? That is literally what you're being set up for as a consumer, and what I advocate for is that you have access to resources. You do. You do. Even though they are working very hard to limit your access to them, you have access to resources, and look at who is giving you this information and look at who they're actually trying to protect here. I'm not seeing, again, the basis for this legislation against attorneys that we once saw. Again, it's been pulled apart, picked apart, and looked at and analyzed. Insurance companies got a slap on the wrist, small fines for not even reporting data that the legislator almost didn't have at the time that they were lobbying for this or were publishing it to us. And also thereafter, they still didn't comply with certain obligations. And so it's something you all need to be paid particular close attention to as you're dealing with these things and you're moving through the claims process. We're here to help you. There's a lot to kind of break down, and there's so many cases out there, and lawsuits favorable to policyholders on deductible issues. So when you're hearing issues of deductible, you're hearing issues of assignment of benefit. Again, these are the minority of issues, yet I understand they play well in the news. They've gotten even, like I said before, they've gotten even national coverage to ponder that somehow signing a contract with a mitigation company at the outset of a loss is something that is like a bad thing. It's not. Again, it's so crazy. I don't even understand where it's even coming from. Why they actually think that this is such bad, because they can find one case or they show one contract. I mean, there's so many contracts out there. And just because a contract has a direction to pay or an assignment of benefit does not mean it's a wrong thing, does not mean it's not in your interest, because you might not have the money to come out of pocket, and your insurance company may require you to pay your deductibles in advance of doing anything to that contractor, right? But is it to say that maybe there is another group lobbying the insurance, maybe just lobbying the legislator to push people towards programs that are wholly owned or partly owned, or the insurance companies themselves have invested. And there are mitigation programs out there that are owned, operated, or invested in by insurance companies. And I think if we drill down and look at this, that we may find some evidence of this. And we'll see. We'll see what's to come here. So there may be more to come on this issue, and I sit here smiling thinking about it because I just don't understand the motivation. I mean, again, going back to prior issues, right? There was a massive move against public adjusting one time that got ruled unconstitutional back when they tried to make it illegal for a public adjuster to basically work for anyone that had a citizen policy at one point. Couldn't solicit during certain business hours. A lot of this stuff got repealed, ruled unconstitutional. Then there was moves to further restrict public adjusting on fees and licensing and accreditation and bonding and fingerprinting. I mean, the amount that you need to go through to get a license to represent a policyholder in a claims process is far greater hurdle than what it requires someone to get a license on the other side. I can tell you that without a doubt. And also, too, most of the training that public adjusters go through because of the apprentice program and everything else is far more exhaustive than anything I've seen for an independent adjuster. I can tell you that emphatically. It's just a little bit mind-blowing. And the legislation against attorneys, again, where's the basis for it? Where's it coming from? And then we have the fraud allegations, the 60 Minutes expose, correcting which dates. I mean, we can again go back to Superstorm Sandy with the edit and modification of our engineering reports and findings as to the causation of damages and loss. I mean, again, I just keep connecting dots here. I could keep doing this. I could talk about how insurance companies have conflated issues of deductibles. You got Dickerson versus Lexington Insurance Company in 2012 in Louisiana. Hurricane deductible applied incorrectly to a claim for a non-hurricane storm. I mean, they're literally trying to apply wrong deductibles. New Appleman on insurance law. California case, dispute over whether multiple deductibles could apply for wind and flood damage from a single storm event. The outcome, court sided with the policyholder, ruling that the insurer's attempt to apply separate deductibles for wind and flood damage in a single event was unjustified. We got Slayton versus Lloyd's of London from 2021, super recent case. Policyholders sued after their insurance imposed a named storm deductible for damage that occurred outside of the designated storm period. The outcome, the policyholder won, and the court ordered the insurer to pay damages, ruling that the named storm deductible was improperly applied to losses that occurred before the storm was officially named. Addressing this issue of deductible phobia, it's just like there's so much to dissect. There's so much to pull apart here. There's so much that you need to be aware of. I'll throw out a few more cases, some interesting stuff here. Moore versus Allstate, 2020. It's a pandemic case. Allstate was sued for fraudulently denying wind damage claims by misattributing them to other causes. Outcome, Allstate settles, paying millions in compensation to the policyholders. McKinney versus Nationwide, 2019 case. Nationwide uses deceptive adjusting tactics to underpay homeowners after tornadoes. Really? Outcome, jury ruled in favor of policyholder, awarding them punitive damages. It's 2019. Wise up. Think for yourself. Get the information you can use by tuning in right here in the Recovery Report every single week, 11 o'clock Eastern Standard Time. We want to work across the aisle. We want to work with policyholders. We want to work with insurance company representatives. We want to make sure that you are getting your fair share of your recovery every time you suffer loss and damage. And if you are a board member or you're a community association manager or a business owner and you have not hired a representative to handle your claim, how are you protecting the fiduciary interests of your investors or your fellow unit owners? Think closely about that. And as homeowners, you are so disadvantaged at this point because deductibles are super high, coverages are super low. But when it comes to hurricane, the coverage is there. You just have to understand how to navigate the process and document your damages to your benefit. Do not rely on your insurance company to advocate for you because, quite frankly, the people that come out there that represent their interest are not there for you. It's quite simple. It's obvious. But unfortunately, we see so much negative campaigning against advocates that are trying to help facilitate the process for policyholders. And we hope things will change in the future. But again, wise up, think smart, and tune in right here every single week on the Recovery Report Live. Thanks for joining us this week.